Good morning, ladies and gentlemen. This is Alex, Senior Account Executive at GDMFX with your European session outlook. We're going to start with the North American markets. The day's economic reports were mixed. Underlining strength in the labor markets and weakness in manufacturing. The number of Americans applying for unemployment benefits fell last week after a mini spike earlier in December that boosted jobless claims to a 5-month high. A measure of manufacturing activity in the Philadelphia area fell back into negative territory in December, another indicator of the difficult times facing the manufacturing sector. The U.S. current account deficit, a measure of the nation's debt to other countries, rose 11.7% in the third quarter to the highest level since 2008. That's not good for the U.S. Meanwhile, U.S. leading economic index rose 0.4% in November to 124.6. Yesterday, the energy and materials sectors led the market retreat, which erased gains for the main indexes from the previous two sessions. The Dow is 29 points down, the Nasdaq 85 points down, and the Dixie is up to 98.81 from 98.75. We had good movements on the currency pairs. USD Canadian dollar 130 pips up. USD Swiss franc is sideways, as well as the USD JPY. However, the USD JPY today is with 170 pip range, and it's 60 pips down currently. I'll talk more about that later. We have Tier 1 news today from Canada, Consumer Price Index year on year, and Consumer Price Index core year on year. Tier 2, Consumer Price Index month on month, again from Canada, and from the US Market Services PMI and Market PMI Composite. Alright, on to the EU markets. Today we had the economic bulletin from the European Central Bank. The Eurozone economy will continue to grow at a moderate pace in the near term before gaining some strength over the coming 2 years, but there are risks to this outlook, the European Central Bank said on Thursday. Household consumption will remain the driver of growth, benefiting from improved labor markets, while business investment could also gain some strength, the ECB said in its economic bulletin yesterday. In Switzerland, we had also some news. Switzerland's SECO group indicated that the nation is likely to regain its economic momentum over the next 2 years as state of the global economy gradually improves. They left the growth outlook for the next year unchanged at 1.5% and is expected to rise to 1.9% in 2017. We also had EU labor costs come out at 1.1% compared to a previous 1.6%. Alright, on to the UK markets. UK retail sales rose by more than expected in November as shops offered promotions at the end of the month in the run-up to Black Friday. Sales volumes increased by 1.7% in November from the month before. Compared with the same month last year, sales were up by 5%. The UK's FTSE 100 rose 0.7% to close at 6,102 for a third consecutive day of gains. Alright, on to the Asian and Pacific markets, where we had interesting news from Japan early in the morning, which caused movements on the market. The interest rate decision remains the same at 0.1%. We did have a monetary policy statement and press conference after that, which was the interesting part. The Bank of Japan announced supplementary measures for its quantitative easing program Friday, committing to increasing its exposure to longer-term government bonds and domestic stock funds. The central bank said it will lengthen the average remaining maturity of the Japanese government bonds it purchases to 7 from 7 to 12 years, from 7 to 10 years, it said it would maintain its overall target of annual asset purchases at around $650 billion. The Bank of Japan also said it will buy another 300 billion yen of exchange-traded funds, in addition to the 3 trillion yen in ETFs it has purchased annually since late 2014. The additional ETF purchases would target funds comprised of shares in companies that are proactively making investment in physical and human capital. Last sector for the day is commodities. We had the natural gas storage change. It fell by 34 billion British thermal units, below expectations for a decline of 40 billion. Futures turned lower on Thursday, erasing gains of more than 2% after the data. Gold slid by nearly $30 an ounce on Thursday, tumbling back down to near 6-year lows in the first full session since the Fed hiked interest rates for the first time in nearly a decade. Crude futures fell considerably yesterday, extending losses from a massive sell-off in the prior sessions, as investors continue to digest a sizable inventory build from last week. Gold had a range of $26, trading at $1,057. Silver had a range of 48 cents at $13.80 now. Crude oil had a $1.20 range at $34.80 now. Natural gas is trading at $1.70 at the moment with a range of 10 cents. Alright, thank you everybody for the attention. This was today's European Session Outlook. I'll see you next time. Goodbye.